Wall Street sees no reason to doubt gold's march to $4,000. Main Street grows more bullish as government shutdown starves markets of data. Gold melted upward this week as the shutdown of the United States government provided one more reason to dump dollars and flee into hard assets, driving the yellow metal to the edge of $3,900. Spot gold kicked off the week trading at $3,768.19 per ounce, and it would never sniff that level again. Just after midnight, gold broke through $3,800, and by Monday's North American Open, spot gold was trading at $3,826 per ounce. This level proved to be solid near-term support for the yellow metal, and gold prices made another push higher overnight, topping out at a near-term peak of $3,870 per ounce by 2:30 a.m. After a double top at this level, the bulls balked and gold saw its first sharp sell-off of the week, dropping back down to test support at $3,800 by 5 a.m. Eastern Daylight Time. But the floor held, and by Tuesday's American Open, gold was right back at its near-term support level of $3,825 per ounce. This time, American traders wanted in on the action, and they pushed gold quickly up to $3,854 per ounce just before 11 a.m., and as high as $3,860 per ounce just before the close. Asian traders then took the yellow metal as high as $3,869, whereupon the European session drove gold to what proved to be the weekly high of $3,894 per ounce at 5 a.m. Eastern Wednesday morning. What followed was the only meaningful consolidation period of the week, as gold prices slowly slid down to $3,856 per ounce at the Asian Open, before slowly climbing back to $3,893 per ounce 15 minutes before the North American Open on Thursday morning. This time, however, American traders doubted gold, leading to the yellow metal's second precipitous drop of the week, this time down to $3,828 per ounce by 11:45 a.m. Eastern Daylight Time. But by the North American close, gold had erased half of this decline and was holding back above near-term support in the $3,857 area. Following a brief dip down to test $3,840 near the middle of the Asian trading session, gold embarked on its final climb of the week, rising to $3,866 per ounce by 6:45 a.m. and all the way to $3,887 per ounce by the North American Open. After one final dip to test $3,867, North American traders ultimately pushed gold to the very edge of its weekly high at $3,892 per ounce before pulling back to trade in the mid-$3.80s into the weekly close. The latest Kitco News weekly gold survey showed Wall Street as bullish as ever following another standout performance, with Main Street investors also increasingly optimistic about the precious metal's potential gains next week. The yellow metal rose for the 7th consecutive week. It has fallen in only 1 week since the end of July, said Mark Chandler, managing director at Bannockburn Global Forex. The US Gov shutdown, more talk of Europe repurposing Russian reserves, and the hybrid warfare in Europe seem to support sentiment. Near-term support appears to have been built around $3,800, Chandler added. $4,000 does not seem so far away. Up, said Darren Newsom, senior market analyst at barchart.com. I can't say the situation in the US is the same, as it has gotten worse. Central banks around the world, along with global investors, understand this and continue to buy gold. Up for next week, said Adrian Day, president of Adrian Day Asset Management. There are factors that could come together to see gold pause its relentless move up, the US government shutdown ending, and a brokered peace in Gaza, amid the ongoing strike among Chinese gold buyers. The first two were not the cause of gold's appreciation, so logically should not have an impact if they are reversed, while the Chinese pause in buying evidenced by large discounts in Shanghai has been going on for a while. So on balance, I think gold will power through these potential negatives. Daniel Pavilonis, senior commodities broker at RJO Futures, said the impact of the government shutdown on the Fed's ability to gauge employment is minimal, as he doesn't believe the Fed is that reliant on government numbers, which have been way off estimates of late. The Fed should have its own dataset that they're tracking, so I don't think they're flying blind per se, he said. They should have a good feel for things. He said that he saw a little bit of sticker shock in the market yesterday on restrained Fed speak, but it was short-lived. The metal sold off when Dallas Fed President Lori Logan said that they don't want to cut too much and have to revert back to raising rates, he noted. But everything looks like it's coiling up. At these levels, which we haven't really seen, obviously, you have your percentage of client base that's always looking to be long precious metals, he said. But now we're starting to see money come in from the sidelines that want to be long metals, looking for a far greater breakout. I think now we're starting to see some of the FOMO money move in and probably push this thing higher. Paviliona said this is starting to be apparent in the silver market. We're butting up right against $48, we keep on getting up there, he said. We're $2 away from the all-time highs. And I think if we break out, there's probably going to be a lot of upside there. Gold, I think, is just more of a behemoth in terms of trading, he said. I think that's locked-in money just chipping away at the long side. I was talking to this trader, he's been around for a long time, traded the metals back in the 70s, and saw what happened with depegging the dollar from gold, and watching gold go from like $35 an ounce up to $300, Paviliona said. If you look at some Elliott wave models and what the possibility of the upside still is, if we stay in the conditions that we're in right now, maybe we see $8,000 to $10,000 an ounce in gold by 2030. We're at the tail end of 25. We have 4 more years of upside. This week, 12 analysts participated in the Kitco News Gold Survey, with Wall Street overwhelmingly bullish once again. 11 experts, or 92%, expect to see gold prices rise during the week ahead, while not one predicted a price decline. The remaining analyst, representing 8% of the total, expected the yellow metal to trade sideways next week. Meanwhile, 253 votes were cast in Kitco's online poll, with Main Street investors' bullish sentiment beginning to catch up to their professional counterparts. 186 retail traders, or 74%, looked for gold prices to rise higher next week, while another 45, or 18%, predicted the yellow metal would lose ground. The remaining 22 investors, representing 9% of the total, expected prices to consolidate during the week ahead. After a week focused on employment indicators, some released, some delayed, next week we'll see very little in the way of US government data unless there's first a breakthrough in shutdown negotiations. There will, however, be plenty of Fed speak. On Wednesday, markets will watch for the release of the minutes from the Federal Reserve's September monetary policy meeting. Then, on Friday, the preliminary University of Michigan Consumer Sentiment Survey for October will give traders a sense of how the American household is feeling about the economy and their place in it. Markets will also pay attention to comments from Federal Reserve officials, with Bostic, Bowman, Miron, Kashkari, Barr, and Musalem all scheduled to speak. Rich Checkan, President and COO of Asset Strategies International, sees nothing but green lights for gold. Although we will most likely see pullbacks in the future for profit-taking or once the US government reopens, I don't see either happening just yet, he said. Mismanagement of fiat favors gold. Geopolitical crisis favors gold. Social unrest favors gold. Cutting already low interest rates favors gold. A weakening US dollar favors gold. A gold-silver ratio above 80 favors gold. The Dow-gold ratio favors gold. And, although it is starting to slowly awaken, investor sentiment is still weak, favoring a push for higher gold prices. Colin Syasinski, chief market strategist at SIA Wealth Management, is bullish on gold for the coming week. At this point, there just doesn't seem to be much scheduled on the horizon to knock the upward trend in metals off course, unless a major surprise comes out of left field, he said. He's also not convinced that the government shutdown is having much direct impact on the metals. It's more a case of it's not helping the US dollar, he said. It's less about the metals themselves and more that it's making the US a little less attractive. Capital has been flowing into the US as part of a flight to safety, but things like a government shutdown remind people that the US isn't quite as safe as you think, so some of that capital is then getting shifted off into the metals instead. Now, if that gets resolved, or peace breaks out, or some other positive event happens, then that could take some of the tailwind out of metals for a while, he added. Things have been going all metals' way for a long time, and at some point, they'll be due for a pause or a consolidation, or a correction. But when that is, it's hard to say. Siersinski agreed that if gold breaks above $3,900, people will be in a hurry to get to the $4,000 level. Thank you for watching. If you think this content is useful, please subscribe, like and share my channel. Thanks you.